I had somebody who had been in business for 40 years, self-employed for 40 years. I looked at their taxes for them and I was like, do you realize you're still depreciating something from like 10 years ago? And that part of their business had been sold. And he said, I don't know how to read that thing. I just write a check to the accountant and to the IRS at the end of the year, and that's all I want to know about it. And it's like, you gotta, we have to do better. We have to do better with our numbers.
This is Shop Talk Her Way with JeanAnn SaintGrace.
Have you ever heard the term that nothing's more certain than death and taxes? Well, we need to talk about that. But this subject of this episode of Shop Talk Her Way is all about accounting, record keeping, and how important it is. And if that's something you struggle with, I promise it won't be boring, but let's talk some numbers. Welcome to Shop Talk Her Way with JeanAnn SaintGrace. I am happy to be with you today, and big shout out to WorldPac and WorldPac Training Institute for being the sponsor of our podcast. They continue to be a wonderful partner, not only for getting you the parts that you need, but also for continuing education for everybody in the shop, from the technician on up to the owner. So thank you again, WorldPac, for being such a wonderful sponsor and friend of the podcast. So let's get into numbers. This is probably one of the most neglected things that I have found in shops, and it predates me even being in automotive. It was something that I found early on because before I was anything else, I was a bookkeeper. And one of my first run at self-employment, I was a freelance bookkeeper. I went into different shops and did their books for them. And it's something that is often neglected. And a lot of times it's because you don't know what you don't know. And as much as we have, like I said, excellent techs wanting to become shop owners and wanting to move into the entrepreneurial space, they don't always have the help that they need in this department. And it's so important that you find a good accountant, that you find a good financial advisor, for multiple reasons. But you need somebody who can be your ally in figuring out exactly what your book should look like. And what I have found in coaching automotive repair shops is that a lot of times their accountants don't know really what running a shop entails. They don't really have a good handle of what our cost of goods sold should look like. They're often miscategorizing things just because they don't know. And then the shop owner doesn't know. So we're compounding problems. And I am not lying. I wish I was. I wish that I could tell you this was not true, but I had a run of a couple of weeks where I found two different discrepancies in someone's books that ran. They were either, one of them was $100,000 over, one was $100,000 under in their reported income. And you can imagine what that would look like for taxes. They either paid way too little or way too much, and now we've got to refile taxes. So the time to jump on this is at the beginning. And if it's not your beginning, then the time is now. Because we probably have dollars hiding in places we don't know they're there. We may or may not be properly reporting our income. We may not have a good diagnostic tool. So this is the best way for I think, for me to talk to shop owners, advisors, technicians, because everybody needs to understand the numbers. The numbers are not an owner thing. We need to start being a lot more transparent with our team so they understand why we're worried about productivity, why we're worried about margins, why we're worried about sales goals, because most times they're not numbers that we've pulled out of the air. Most of the time, our goals are what the business needs in order to be profitable, to get all the bills paid, to keep all the checks cash, all of those things. And I think as owners, we tend to hide, be less transparent with the financial side of things because we don't want people to know how much money we're making. Fair. But we can talk about these higher level aspects of accounting and profitability without showing our profit and loss statement to the world. So this is a multi-pronged approach, and it's probably, I could talk about this forever, so this might turn into multiple episodes, but today I want to focus on um, why your accounting is so important and why, in my opinion, it's non-negotiable. So first of all, you should have an accountant that you like. You should have an accountant who's willing to answer your questions. And you should have an accountant who's willing to give you advice or point you in the right direction when it comes to making business decisions. There are so many accountants out there today. All they do is file your taxes, tell you how to minimize your tax liabilities, and that's it. And in doing that, they're doing a huge disservice to the business owner because you don't know what you don't know. What can I deduct? What can't I deduct? What should be on my profit and loss? What shouldn't be? And so there's all these gray areas where if you don't have a bookkeeper who's knowledgeable, you don't have an accountant who asks good questions or answers your questions, then you might be in the dark about this stuff. So, first of all, let's start at the beginning, which is your shop management system. And as we've said before, there are shop management systems from here to Christmas, every flavor, everybody's got a favorite. That's fine. The most important thing is how is the information getting from your shop management system into your bookkeeping system? If you're using QuickBooks, that's generally what's being used. And that would be the one that I would be most focused on. I've been using QuickBooks since almost it came out. So, um, almost 30 years. I think 2028 will be their 30th anniversary, and I've been using it since it pretty much came out. And so since we opened the shop, um our shop in 2000, and then we went to Mitchell, they talked about integration between your shop management system and your QuickBooks, so that at the end of the day, all the transactions flow over from whatever shop management system you're using into QuickBooks. Everything goes in there, and it should be a marriage, right? A good marriage. But oftentimes it's a bad marriage because chances are the people who design the software integration aren't accountants. They're not bookkeepers. They don't know how to do that properly. Um, and if it's not set up right, it's not going to give you the information that you need. So, we should be tracking all of our profit centers. We should be tracking labor. We should be tracking parts and shop supplies. We should be tracking hazardous waste. We should be tracking um, our sales taxes. All of those things really need to come into the shop, into QuickBooks on their own lines. That makes it so much easier to track. And it also makes it easier to figure out what our profit margins are when we get to that, when we get to our cost of goods sold. Unfortunately, the most of the integrations either come over as a lump and everything goes into income, or it comes in every single transaction line, so that if there's an error or if we have to go in and look at something, chances are it's coming over in thousands of transactions every day. Because think about every line item on every one of your tickets and think about every transaction going that way. So I personally, not a proponent of integration. That's my opinion. I have elegant ways of doing that, that take a minimal amount of time once you know how to do it and what you're doing. And you don't have to be a bookkeeper to figure it out. You just need somebody to lay out a map for you. Anyway, that's my number one pet peeve, and one of the things that I personally would fix in every shop that I coach if I could. Because I am not a wizard and I don't understand the integration works, and I'm always scared to change something. So that's number one. Number two, chances are, unless your accountant is really, really good, they are not asking you for the raw data out of your shop management system. And so if all they're looking at is your profit and loss on QuickBooks, they don't have a fail safe. They don't have a check and balance for what they're working on. So your accountant should get a complete sales report for the year or whatever period of time they're working on for you, along with the profit and loss. And those two things should match. Um, a lot of times, like I said, they don't. Um, and that's a big problem. Next thing is then what do we do with the numbers once they're in QuickBooks? Well, then we have to track our cost of goods sold, which is your parts, your shop supplies that you buy, whatever sublet you do, all of those things. That's all your cost of goods sold. And in my mind, the way I want it laid out, I want a line of cost of goods sold for every line of income that you have so that you can see directly what your margins are right off your profit and loss. You don't have to go and look for it, it's right there. And for those of you who are technicians at heart, this is how you diagnose your system, your business for profitability. If you don't have this diagnostic, this trouble tree to figure out where the money's going, if the numbers in are garbage, the numbers out are garbage. So we have to make sure we've got clean movement across the system so that when we have your profit and loss, we can look at it and tell you where the problems are. Obviously, with some analysis, sometimes you can look at it and be like, hey, these numbers are not right. But sometimes it takes some digging. So it's good to have a nice, tight cost of goods sold. Um, and if we're not tracking our payroll for our technicians, our taxes that we pay for our technicians, and any other things that go towards the techs, like uniforms, health insurance benefits, retirement account contributions, if we're not counting them in our cost of goods sold for our technicians, we're not getting a true cost of goods. So we're not getting a good margin. So we really don't know where we're at. I'm throwing a lot of like big numbers out, but you have to think about this as these are the things we need to start looking at. And if you don't know how to read your profit and loss, then we need to talk and we'll figure out a way to get this figured out. This might turn into like a workshop or a how-to video on YouTube of this is how you read your profit and loss. Because like I said, this is your trouble tree. These are your diagnostic tools to figure out where the money is and where it's going. So profit and loss. Balance sheet is a whole nother set of voodoo and black magic. And it's important, but it's not as important as the profit and loss. So I'm going to leave balance sheet. That's a total different level. And we may or may not talk about that later. Let's concentrate on profit and loss. So back to the accountant. If the accountant is not looking at both the shop management system and your QuickBooks to verify they match, there's a problem and that needs to be addressed. If you have an attitude of you just want to throw paper at your accountant, write them a check at the end of the year and call it a day and pay whatever taxes, that's not a good a way to approach that either. I had somebody who had been in business for 40 years, self employed for 40 years. I looked at their taxes for them and I was like, do you realize you're still depreciating something from like 10 years ago? And that part of their business had been sold. And he said, I don't know how to read that thing. I just write a check to the accountant and to the IRS at the end of the year. And that's all I want to know about it. And it's like, you gotta, we have to do better. We have to do better with our numbers. And a lot of people have that attitude of they just want to get it over with. They just want to get out of there, whatever it costs. They don't care. They just want to get out. And we have to, again, look at taxes for what they are. They are certain, right? There's going to be taxes. We don't want to tank our income in order to avoid paying taxes. We want to um, minimize our tax liability, but not make not make paying taxes a reason why we don't raise our labor rate, we don't improve our profit margin, we don't do these things. Because profit, in my mind, is for the future. Profit is for um, benefits for your team, upgrades to your shop and your equipment, more team members, your retirement. Something that a lot of people don't talk about, and I think it's important, is that for shop owners and technicians and advisors, sorry, advisors, you always get left out, shop owners, anybody on the team, we need to be providing them with what they would have if they worked for a big company. So if you went to a dealer and worked for a dealer for 20 or 30 years of your life, you would walk away from that with several weeks of vacation, retirement, a retirement plan, probably some kind of stock options or profit sharing. You would have at the end of 30 years something to carry you into your future besides your Social Security and Medicare. And a lot of times we skimp on those things thinking they're not necessary or they're luxuries, but no one should spend 30 years of their life doing something, especially something that's relatively hard, relatively stressful, and of such good service to their communities and have nothing to show for it. So if I could wave a magic wand, everybody in the shop at the end of 30 years would be sitting on a fat IRA, a fat 401k, um, a house or whatever they want as far as their living conditions, something to carry them into their retirement years, not broke. And a lot of times, because something feels too complicated or a pain in the neck or something we really don't need, we're shortchanging ourselves. And as I said before, and I will say it again, um, having a retirement fund saved me after my husband passed away. It saved me a lot as far as headaches, heartache, any kind of ache that you can imagine. So, that's something to think about. Something also to think about, and this is more of a succession conversation, is key man or life insurance for the principal of the business to make sure that um, family partners, whatever that looks like, business partners, team, whatever that looks like, there's some kind of a pillow for them to land on. Um, we don't know what's going to happen in the next moment, day, month, year, 5 years, 10 years, whatever. But if we can plan and cover a lot of these things relatively inexpensively, we can save a lot of challenge down the road. But back to accounting. So, if your accountant isn't talking to you about a retirement fund, if they're not talking to you about planning for the future, if they're not looking at your books at least quarterly to tell you where you're at compared to last year and what your tax liabilities might be, then you probably need a new accountant. And and that's just the truth. You don't want to get hit at the end of the year with a huge tax bill with nowhere to move because there was no review. And on April 15th, when you're writing the check for your tax return, you're already also writing a huge check to the IRS. That's, in my opinion, not okay. So we need somebody who's proactive, who's curious, who's willing to share. Um, like I said, I had been in business for 10 years before anybody said, "Hey, you're eligible to do a safe harbor 401k and you could put 3 to 4 times the contributions in tax deferred as you were putting in on your simple IRA." That's big money because at the time we were talking a difference between $6,000 and $24,000, not to mention the matching that came out of that. Because as when your as an employer or as an employee, when you contribute to your IRA or your simple IRA and your company matches that, that's free money. That's not taxed. It's taxed when you take it out, but it grows tax free until you pull it. So, if there's one thing that I could really be upset about, is that nobody said anything about that to me before. And the reasons that I was told was they're too complicated. The truth is, they're not too complicated. You find a company to manage all of the tax reporting, all of the rules, write it up, everything for you. And all you have to do is decide, are you going to match like 2, 3, or 5%? That's the only decision you have to make, and write them a check. Write that check. It is ridiculously inexpensive to have somebody do all that work for you. Back in the day, it was $500, maybe $1,000 now. The difference between putting $24,000 in a tax deferred account over $1,000 that you might have to pay out for administration, totally worth it. So that's one of my big pet peeves, is that nobody ever said anything about that with a small company you could have something like that. That that's life changing, especially if you have an apprentice tech that starts out when they're 18, 19 years old, and they're contributing every week for 20 or 30 years. That's a lot of money. So there's that. And then, when we look at your expenses, if your expenses aren't being tracked properly, then we don't always, or can't always, figure out where the bleed is in the business. If we're making a ton of money but there's no money on the bottom line, where's it going? Or there's money on the bottom line on the profit and loss statement, but there's no money in the bank, where's it going? So again, as a diagnostic tool, having your expenses laid out properly so that you can figure out exactly how profitable your business is key. And again, sometimes we don't want to look at the numbers, because the numbers will never lie to us. The numbers will never tell us we're doing good when we're not doing good, or vice versa, especially if the numbers are tight. And it's kind of one of those things where you can stick your head in the sand and just hope for the best, or you can be proactive with it and manage it and work with it and use it as a tool in your business, just like you would an impact out of your toolbox. And then a well organized office is just as important as a well organized shop or toolbox. In order to be able to answer an accounting question, a bookkeeping question, you want to be able to put your hands on a file that's got everything in it that you need for that specific task, whether it's from a vendor, your payroll taxes, whatever it might be. You want to be able to go into a folder and pull it out and hand it to whoever's helping you, or if you just need to review it. That makes life a lot easier. So on top of being really good with your numbers, you also have to be good with your organization. And again, I will never forget, and again, this was a small town in California. I walked into a machine shop one day, and the guy was using a 12-ounce Coors can that was full at noon for a paperweight, and he had like all his papers underneath it, and his open beer was sitting there holding it all down. And, I don't know, we've all been in those shops where there's piles of paper everywhere. You can't find anything. If you're trying to do a return or something like that, where's the original invoice? Now it's nice that you can, pull stuff off of the internet, but at some point you might need that hard copy. And as much as people go to paperless, or, a paperless office, sometimes that's not always feasible, especially if we're looking for signatures, if we're looking for, when was this delivered? Did it get delivered? Did we get the right part? Did we get the wrong part? I'm still a big proponent. There's some things you need on paper. And then also something that I will discuss deeper. Um, as an owner of a business, you should never delegate away your signing on your checking account. You should never have your operating account be signed on by anybody but you. If you need to be able to have a second in command or a team member sign a check, like if you're on a vacation or something like that, then I strongly recommend you have a small account with a minimal amount of money in it that they can draw on in your absence, but do not give anyone access to your primary checking accounts. And I'll tell you why. Because no matter how much you trust someone, the person writing the checks to pay your bills, if they're signing those checks off, also, it's an opportunity for them to defraud you. And you might say, well, I trust this person implicitly. Those people end up with problems. Those people might end up with a gambling issue. They might end up with um, a an addiction, a substance addiction, a shoe addiction, a tool addiction. Like, we don't know what might happen. But if they get in a bind and they know that as an owner, you're not paying enough attention, you can end up being defrauded. And I know of at least two of my previous coaching clients who, one, we never did all the math, but we know for sure it was at least $100,000 where checks in QuickBooks looked like they were going to vendors, but they were actually going in this person's pocket. And we had another one that's probably closer to 200,000 because he was just trusting them to write the checks. And I wasn't around when that one happened. That was a cautionary tale. But I can go even deeper and tell you that I knew a business owner whose wife was doing the books. His wife was signing the checks, paying the bills, supposedly developed a substance abuse issue, and every dime that they had went into that substance abuse challenge. And there, because she was holding down the office and he was out working, um, the vendors were calling her. She was saying, yeah, you'll get paid. And he didn't know any different because she was telling them whatever to keep the materials coming. But every ounce of money that came into the business was not going towards their bills. It was going towards their substance issue. So that sounds bad. Like, you can't even trust your spouse, question mark. You need to have a knowledge of how the financials work in order to be able to say, something's not right here. Because we don't know what can happen. And I'd be less worried about a spouse. But, you know, people are people and stuff happens. And if they get in the bind and they think you're not paying attention, the victim could be you. And if we think about, if we're working on a 50% profit margin on average, and we need to make up any kind of money, if we lose $1, we need to make $2.50 to make up for that dollar with profit and everything else. So if you imagine you need $2.50 to pay for $1, you need $250,000 to pay for 100. So, we have to manage that risk just like anything else. We have to manage that risk. So, on top of having a good accountant, having good record keeping, and then also having accountability, checks and balances within the accounting system so that we know that the money is going where we say it's going, where we know it's going. So, if you have a bookkeeper, then they should be writing the checks, they should be giving you the checks with the bill attached, and you should be signing the check, and then the check goes where it needs to go. And then you should be reviewing your bank statement to make sure that it's balanced, that all the checks have cleared, that you know where the money's going, and that you see the statements as they come through so that you know that your balance isn't growing while they're putting money in their pocket. And I hate to sound too distrustful, but I've seen it happen too many times. One time is too many, two times is way too many, and three times that's just our fault for not paying attention. Okay. So I hate to be a gloomy Gus, but we have to trust but verify. We have to be sure that wherever the money's flowing from, that it's flowing to, and it's going in all the right directions. And talk about going in the right direction, let's talk about WorldPac and WorldPac Training. They are our sponsor for the podcast. So we want to thank them for giving us good service, for giving us excellent products, and also for investing into training that is offered to technicians, service advisors, and owners to help make the industry better, to help show the world, on top of just our inner industry, that we are professionals, that we invest in our people, that we invest in our futures. And we can do that by using quality parts and quality training that we can get from WorldPac and WorldPac Training Institute. So I want to thank them again for being our sponsor. So what else can we talk about with the numbers? Learn how to look at them, learn how to decipher it. If you're using QuickBooks, and this is getting a little bit into the nitty gritty details, there's a profit and loss that if you check a box, on desktop, on QuickBooks desktop, it'll give you a percent of income on your profit and loss. Makes it very easy to figure out what your margins are. And then if you're on QuickBooks Online, they have that report. It says profit and loss with percent of income. It's very easy to find. You can make it a favorite. You can print it up every time. It's one of the best diagnostic tools that you can have. And I'd also encourage you to learn how to put your shop management system reports side by side with your profit and loss and look at the numbers and see how close they are. If they're not within 1%, we have a problem and we need to reevaluate our integrations, or we need to evaluate, if we're doing it manually, go back and find where the errors are. And I know I come from an accounting background. I've been a bookkeeper most of my adult life in some way, shape, or form. So if you need help, if you want help, there's help out there. And educate yourself. Just like you didn't always know what a waveform was, or you didn't always know how to diagnose a drivability problem, you can learn how to look at your numbers, see what they're looking like, at least give them a smell test and know if they're good or they're bad, or if something needs a deeper look. And again, find somebody qualified and knowledgeable and in their integrity to help you do that. Surround yourself with a team of people that fill in the gaps of your knowledge. Talk to other shop owners who are maybe a little bit ahead of you. And like I said, talk to your team, at least give them a cursory understanding of what profit is really about and why we're chasing profit, why we're chasing profitability and margins, because those are the things that pay the bills, keep the doors open, and keep us moving in the right directions for the future. And we don't have to, like I said, open up our books to our team. Although there are shop owners who do that, and more power to you. I that's a level of transparency that I am not comfortable with. But we can talk about like what portion of every dollar we need to go to certain things. We need a portion of every dollar to go to labor. We need a portion of every dollar to go to parts. We need a portion of every dollar to go to overhead and expenses, and we need a portion to go to profit. And that's an easy way to talk about it. When we talk about labor inventory, we can talk about, if you're going to go into the grocery store and buy a gallon of milk, are you going to buy a gallon of milk that's full, or are you going to buy a gallon of milk that's 75% full? That's how we can talk to them about productivity. We can talk to them about productivity in cell phone availability. So if you have a cell phone and you picked up that cell phone and it only produced 75% of the time, or 50% of the time, or 20% of the time, that's how we can talk about labor inventory and productivity in the shop. If we're having challenges in that area, we need the people on the team to understand why we're asking them to do certain things. The why has become very important. Back to leadership, we can't just say because I said so and have that be the end all be all. We've got to give them the whys. And there's ways to talk about the whys that don't involve you opening up your financial underwear drawer and showing them everything in your financials. So we can find ways to have those conversations. And I think it's important. I think the more authentic and transparent we can be, the more we build trust with our team and the more they'll work for us. If we're just banging on about profits and this and that all the time without giving them the why, we're going to lose them. We're going to lose their interest. They're going to think, "Oh, you just care about the numbers." And they don't understand why we're worried about the numbers. And the truth is, if we don't have profitable businesses, their jobs are not safe and secure, and it creates a lot of instability for the team and for the business. So I know I can kind of jump around a little bit, but you can see how important, if we start out with good record keeping in our shop management system, we get down to that transferring into our QuickBooks, then we have a tight, clear um, profit and loss statement. We've got everything we need to diagnose where our business at and where we need it to go. So thank you for bearing with me. I know this isn't the most exciting topic, but at least we've kind of topped the top layer of it. If you don't like your accountant, find one that you do. If you don't like or don't have a financial advisor, find one that you do who will help you navigate this. The questions to ask are, how can I minimize my tax liability? How can I prepare for retirement? How can I give benefits to my team? How can I is the key to these questions, because if you just ask them in general, a lot of them are not creative thinkers. A lot of them are just processing the forms at the end of the year. They all should know how to do this stuff. But again, you don't know what you don't know. And the more people you can talk to, the more information you can gather, then the better you're going to do both for yourself, your future, and the future of your team. And we can't neglect the future anymore. We cannot afford to stand by and just hope that the future will take care of itself. It will take care of itself if we take care of it today. So, thank you again for bearing with me through all of this. If you have any questions, if you have any comments, please don't hesitate. If you have enjoyed this, please like and subscribe and even share the podcast with anybody who you think might be interested. I welcome anybody and everybody who's interested. And like I said, if you have comments, questions, I'm always happy to engage with that. Once again, we want to thank WorldPac and the WorldPac Training Institute for being our partner in this. It makes all of this possible. And we deeply appreciate their investment in the podcast. So until next time, I'm JeanAnn SaintGrace, reminding you that you are here for a reason, to stop surviving and start thriving in your shop your way. Thank you so much.